At IB Canada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
In wealth planning, we spend so much time investing, accumulating, and protecting our assets, but spend so little time planning how these assets will be distributed when we are gone. While everyone likes to think that their family will peacefully and fairly distribute the assets when they are gone, this is usually not the case. Money can have a way of bringing out an ugly side in people. Dying without wills means problems, frustrations, delays, added costs, and bitter family disputes. Having a proper will in place can prevent this conflict and ensure everyone is treated fairly. My name is Chow Ivanovic, member of the IB Canada Group. Many people have never talked about their estate intentions with their heirs. We understand this may be an uncomfortable task for some people, but it's important they know what steps you are taking to avoid unnecessary and costly legal battles later on. In Canada, if you die without will, you are deemed to have died intestate. And each province has their own set of rules called the Intestacy Rules as to how your assets will be distributed. Many people believe that if they die without will, their spouse will receive the entire estate. If you have children, in most jurisdictions, this is not the case. Generally speaking, a surviving spouse will receive a preferential share, ranging from $50,000 to $350,000, depending on the province in which you reside. And the remainder will be divided between the spouse and children. For example, in Ontario, as per the newly implemented Succession Law Reform Act, if you die intestate, leaving a spouse and children, on or after March 1st, 2021, the first $350,000 of the estate is paid to the spouse, and the remainder of the estate is divided between the surviving spouse and children. Before deciding you do not need a will, here are some common scenarios that may help you realize why you actually should consider creating one. No will, no executor. That means no one will have the legal authority to manage your assets until the court appoints an administrator, and the person appointed may not be the person you would have chosen. Next one, if you have minor children, a court will be required to choose who will act as the guardian. Your children will also have access to all of their inheritance at the age of majority, that is between 18 or 19, depending upon the jurisdictions, which is still very young. And in many cases, they are not mature enough to manage large sums of money. Individuals in blended families often mistakenly assume that stepchildren will inherit in the same way as a natural or adopted child, leading to many instances where stepchildren are inadvertently disinherited. And sometimes common law partners often assume that they will be treated the same as a married spouse at the time of death. Depending upon which jurisdictions you live in, this may or may not be true. This means that your common law spouse may not receive anything from your estate upon your death. And in the event of a common disaster, where both spouses die at the same time, a will alleviate the potential inequities in jurisdictions where the older spouse is deemed to have predeceased the younger spouse, and avoid the need to probate the same asset twice. Also, without a will, certain assets that you may have wanted to be kept for your family may have to be sold for distribution. Make sure the estate is properly funded. Permanent life insurance can be a great method to inject liquid funds into the estate. These are just some of the reasons why it may be important to have a will. Writing a will allows you to take control over how your estate will be distributed. Even if you have a will, if you have not reviewed it for a while, be sure to update it when your situation changes. Are your list of beneficiaries complete and up to date? Are there any new grandchildren or former spouses to deal with? Those are just few issues you may want to address in your will. Also, in addition to the financial changes, you should make sure your will contains the names of 2 powers of attorney, one for your personal health and the other for your financial health. The bottom line is you can avoid a host of potential problems if you simply plan ahead. Hopefully, with a little awareness, those of you who do not have a will will start thinking about getting one. You never know when it might be too late. I hope you find this information valuable. Until next time, thank you for watching.
IB Canada Group, your independent authority for information on the infinite banking concept.